Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 31st of July. We're going to look at cable now, and cable's just started to steady itself a little bit, and only a little bit. I mean, given the fact that sterling has been down 4 big figures in the past 4 sessions, it shouldn't necessarily come as a surprise that we can find a little bit of support where the market has just fallen so far. However, it doesn't look as though the buying pressure is coming back in really in any significant fashion. We've got the low at 12, 121.17. Now, 121.17, 121 big figure was the low dating back to March 2017. Beyond that, you're looking at 119.80, and that really is like end game territory. If it breaches 119.18, I think the bottom really has fallen out of sterling, and you could see parity possibly. I mean, like we're talking that potential, because obviously the unknown factor of a no deal Brexit could really see the market just plummeting. Anyway, that 121 big figure has effectively held, interestingly enough. As I said, 121.17 overnight, or yesterday, and then before a little bit degree of support has come in. You can see that on the hourly chart where 21.17, the market has just steadied since then. And this steadying on cable, to be honest, is not really much more than the market just unwinding some of this oversold momentum that had built up. Essentially nothing more than that. It's nothing to really get excited about on the bull side. I mean, there's no real appetite to buy sterling at the moment. It reacted to 121.90, so added about 70 odd pips, and then just sort of dissipated that rally. Little bit of a basis of resistance at 22.10 as well, so something to keep an eye on. So you got that sort of 20 pip band of resistance, 21.90 to 22.10. That's a bit of a gauge near term. And if you do start to see the market rallying through these levels, then I suppose the prospect is that perhaps, given the fact that the market has settled a little bit, then we could see a bit of an unwinding move. 23.80 is really the first sign of any real resistance of overhead supply. Because obviously we've fallen so far so fast, it could quickly unwind some of that move. But for now, we're not really anticipating that. I think Brexit is no deal Brexit, and the fears over no deal Brexit are still yet to be resolved. And subsequently, I think that's going to see sterling remaining on the negative side. And I think that we've seen this market just steadying in front of the Fed, really. So the Fed's probably going to be the next trigger for the sterling or cable move. But ultimately, I still see sterling weakness. Anyway, with that in mind, I wish you good luck in your trading today, and I will speak to you later.